Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Okay, in this episode, I'm going to cover all the headlines flying under the radar on our favorite shit. Wow, would you look at that chart from Fred? Nothing to see here, right, guys? From the Daily Hodl, September 1st, 6.44 trillion piled into money market funds as Bank of America warns rate cuts won't fuel rotation to stocks. The amount of capital invested in money market funds has surged to a record level with a potential Fed rate cut coming this month. New figures from the Federal Reserve Economic Data, or FRED, show the amount of capital invested in money market funds has soared to over 6.44 trillion as of June of this year. Speaking of Bank of America, Warren Buffett is dumping B of A like it's a $20 hooker. Warren Buffett's Berkshire Hathaway sells more Bank of America, has now cut stake by nearly 15%. Goldman Sachs layoffs. Investment bank to cut nearly 1,800 jobs amid annual review process. The investment bank plans to cut 1,300 to 1,800 jobs, which is 3 to 4% of its total workforce, as a part of an annual review process. Okay, stick with me, guys. I'm trying to paint a picture for you from Monday. Hedge funds bet against banks, insurance, and property, says Goldman Sachs. Hedge funds continued to take bets against bank and financial stocks in the week to Friday. Goldman Sachs wrote in a note seen by Reuters on Monday amid reported job cuts and reduced deal making. Financial stocks ended the week as the most net sold sector at Goldman Sachs' prime brokerage trading desk, which serves global hedge funds, the note said. Banks, insurance companies, publicly traded property trusts, and capital markets firms, which allow people to buy and sell bonds and stocks, were all sold on a net basis for the fourth straight week. Something's coming, guys. For my gold bugs out there, go read this one in its entirety on Bloomberg, no less, titled "Gold is Rising Because of Demand for Fallback Money. The yellow metal's strong performance may be down to its more fundamental properties. The very rich are fueling a run on storage vaults to hold their gold bars. The price has hit a fresh record in any major currency you care to name at some point this year. A standard gold bar saw its value rise to more than $1 million for the first time. There are a few interesting things about this bull run in gold. One is that it has displayed a surprising level of indifference to both the US dollar and US interest rates. Right up until COVID, one of the most important drivers of the gold price was real inflation-adjusted US interest rates. That's not currently proved to be the case. And now let's do some swan watching from Business Insider just a couple days ago. Bonds backed by commercial mortgages are a disaster as real estate values crumble, hedge funder says. From the article, the commercial mortgage bond market is in serious trouble, according to hedge funder John Devaney. The United Capital CEO pointed to woes plaguing offices in particular. Office-backed loans are defaulting across major cities in the U.S., he said, but pay no attention to this kind of stuff, guys. We've got an election coming up, so you stay distracted. Okay, so crucial jobs report watched for repeat of July shock. They're dropping hints here, guys. The data could determine how much the Fed cuts rates. What to know this week. After a whipsaw month of market action, the S&P logged its fourth straight winning month to end August. For the month, the S&P 500 added nearly 2.3%, while the Dow added almost 1.8% and sits at an all-time high. Meanwhile, the Nasdaq added more than 0.6%. The August jobs report, due out on Friday, will headline economic releases in the week ahead as investors look to see whether the signs of slowing in the July jobs report were overstated or an early warning of a broader slowdown. Updates on job openings and private wage growth are also on the schedule, as well as activity checks from the services and manufacturing sectors. All right, that's great, but it's vague. Let me show you what I mean. Okay, now let's be more specific and put everything in order. Tuesday, manufacturing PMI at 945. Wednesday, U.S. trade deficit 830, but more important, job openings at 10 Eastern. Thursday, 8:15, ADP employment, 8:30, initial jobless claims. Watch that one. Then at 9:45, we'll see services PMI. But then Friday, September 6th, 8:30 a.m., U.S. employment report and rate. So let's add all this up. The Dow is at record highs. The S&P has had 4 straight months of gains. We know we've got a rate cut coming. Money is flowing into money markets. Buffett is selling B of A. Goldman is laying off staff. Hedges are shorting banks and financials. Gold at the time of this recording, 25.31. The commercial mortgage bond market is in serious trouble. Guys, we have to watch all the employment numbers this week because they could cause a serious rift in the market. This slide goes out to Donahue George. I don't know why he's complaining all the time. These regulators are doing a bang-up job protecting retail. B of A, Merrill, fined $3 million for failure to supervise manipulative trading. Merrill Lynch and its parent, Bank of America, accepted a $3 million fine and censure for failing to properly monitor for potentially manipulative trading by its customers. Who are the customers of prime brokers? Hedge funds. This is according to an August 28th settlement with the Financial Industry Regulatory Authority, or FINRA. The violations took place from 2015 to present at Merrill and from 2019 to present for Bank of America Securities, the bank's institutional broker-dealer, according to FINRA. B of A and Merrill relied on deficient third-party surveillance systems to suss out transactions, such as wash trading and prearranged trading, when investors buy and sell the same securities to create artificial activity in the marketplace, according to FINRA. The broker-dealers did not review around 155 alerts representing approximately 700 potentially manipulative equity trades and around 1,000 alerts representing around 125,000 potentially manipulative options trades, according to FINRA. Merrill and its parent bank agreed to the settlement without admitting or denying FINRA's findings, the letter said. Of the $3 million fine, $699,000 will go to FINRA, while the remainder will be paid to exchanges, including the New York Stock Exchange and NASDAQ, FINRA said. Some of the specific missed alerts pertain to low-price securities and warrants. Between 2017 and 2018, for example, Merrill failed to detect wash trading or spoofing, a practice in which traders place an order and then cancel it before it's executed in order to create a false impression of demand. Merrill did not have such alerts because it failed to purchase a low-price data feed from its third-party vendor. Okay, so guys, let me sum this up. This is 9 years of crimes. No one admits guilt. No one loses their license, is suspended, or gets fired. Retail got hosed on hundreds of thousands of trades. They get nothing. B of A digs up $3 million in couch change, and it's all forgotten. Resume stealing. Notice none of the customers of Merrill who actually committed the infractions were mentioned, censured, fined, nothing. I've got to be honest, guys. I'm losing my will to remain in this market altogether. And speaking of FINRA, Don, you're going to love this one. Senator Elizabeth Warren is pressing the nation's broker-dealer regulator, FINRA, on its claim that success in kicking bad actors out of the industry explains why enforcement numbers have plummeted in recent years. Who have you kicked out? The previous slide, I showed you 125,000 infractions. Nobody admitted guilt. Nobody got fined. Nobody got fired, kicked out, nothing. Anyway, fines levied by FINRA have dwindled to half their recent levels, and the number of enforcement actions last year was the lowest in history, Bloomberg News reported in June. The regulator attributed the decline to improved rules and strategies to weed out repeat offenders. What, like Kenny? This guy's been popped 60 times in the past 15 years, breaking securities rules and laws. Who are you weeding out? Guys, let me tell you how I read this. It's anarchy out there right now. FINRA ain't doing shit. Gensler and the SEC are terrorizing the crypto space instead of regulating Wall Street. The feds are manipulating and or censoring bad news because it's an election year. The mustard is off the hot dog. Wall Street is the wild, wild west. They have been getting away with murder for the past 3 years. I expect it to continue. They will only give a shit when something huge blows up, and then the blame game will begin, just like with Bernie Madoff. Well, it's obvious now. Rich Double-Chin Greenfield and Charlie Gasbag were right all along. The theaters are fucking dead, right, guys? We should just shut them all down right now. Inside Out 2 overtakes Lion King globally, now 9th biggest movie ever. Despicable Me 4 tops 900 million worldwide. Alien Romulus and It Ends With Us close in on 300 million international box office. Deadpool and Wolverine crossing 600 million in $3.6 billion summer. Disney dominates with 1.5 billion Labor Day box office. I don't know what to tell you anymore, guys. And how's the war against the US dollar doing? BRICS new development bank authorizes Algeria to join, and Turkey bids to join BRICS in a push to build alliances beyond the West. In fiscal year 2023, I went and looked it up for you. The Biden administration gave Algeria $6.1 million and Turkey $196.8 million. So we continue to lavish money on nations that are planning to screw over the US dollar in the open. From FX Empire, XRP News today. Will Ripple's BRICS ties impact the SEC's appeal decision? The SEC's final judgment on Ripple opens new doors for XRP, but a potential appeal could trigger market volatility. Upcoming U.S. primaries may impact crypto's future, with Deaton challenging Warren's anti-innovation stance. Guys, if they appeal, the coin is going to drop sharply, and I will buy that dip. The SEC has until around October 7 to appeal, so if they don't, I would expect the coin to rise on that news. Either way, Ripple XRP is in the middle of all of it, and that's where Uncle Frank wants to be. This is not financial advice. I am not a financial advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. But let's admit it, it's GameStop that has all the excitement right now. GME is making headlines. It's offering discounts on gift cards and digital titles. It's launching retro stores. Its shares are trading higher. They're closing out a big line of credit. Its earnings day is coming up on September 10th. And now we're all breathlessly waiting for Ryan to announce his plans for that $4 billion war chest. My call, if he says nothing about his future plans for the company by the September 10th call, which happens after the bell, Jimmy may head south. If we get a solid announcement, GME is heading higher, and AMC may follow it up. I saw an interesting article on Yahoo over the weekend, breaking Sunday from Insider Monkey. Archer Aviation made it on the top 10 list of the best potential multi-bagger penny stocks of 2025. I agree, it's my number one pick. According to the article, average upside potential as of August 29th, 152.8%. Number of hedge fund holders, 21. And the next stock I'm adding to my watch list is NVTS. For Monday, a billionaire-led hedge fund is gobbling up this speculative artificial intelligence stock. Should you? Point72 has been steadily increasing its stake in Navitas Semiconductor. Navitas is a leader in gallium nitride power integrated circuits. The company faces significant financial challenges despite its growth potential. Uncle Frank wants to know why Steve Cohen is gobbling it up. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.